All right, folks, welcome. Welcome. Thank you all for being here. I'm Rob Jackson, along with my colleagues Emiliano Catan and Ed Rock. It is truly a privilege to welcome you to NYU and to welcome SEC Chair Gary Gensler for a fireside conversation with all of us about his important work, and in particular with a goal of talking to the students out there interested in following a path like his toward extraordinary public service. I'll say a bit about Gary first, but I want to begin, Gary, by expressing my thanks on behalf of my colleagues, our board's chair, David Katz of Wachtell, Lipton, Rosen, and Katz, and all of the members of our board who were able to join us today. Thank you, Gary, for being here. Gary needs no introduction, so I'll be brief. Before joining the SEC, Gary was professor of the practice of global economics at the Massachusetts Institute of Technology. From 2017 to 2019, he was a state-level regulator, chair of the Maryland Financial Consumer Protection Commission. Previously, he was chair of the Commodity Futures Trading Commission, and he led the Obama administration's reform of the $400 trillion swaps market. He was also senior advisor to Senator Paul Sarbanes, instrumental in drafting what became the Sarbanes-Oxley Act. He was also Undersecretary of the Treasury for Domestic Finance and Assistant Secretary of the Treasury from 1997 to 2001. Was that it?
I have 3 daughters.
Before that, and this is something we're going to talk about a lot today, Gary was at Goldman Sachs. He was a partner in the Mergers and Acquisitions Department. He began his life in private work before turning his talents to public service. Ladies and gentlemen, please join me in welcoming Gary Gensler to NYU. Gary, thank you again for being here.
Thank you for that over-the-top introduction. You're too kind. I'm not buying anything.
Well, you know, former investment bankers.
No, I know.
Yeah. I want to begin, and you know, Chair Gensler, we pride ourselves here at NYU in asking tough questions, and we plan to do that today. But first, I want to note for you, just take a look out here. You're joined by dozens of students, and they hope someday to have the kind of impact you've had, Gary. I talk with our students all the time about what they hope to do in this world. And what they tell me is that they hope to gather the skills necessary to have real impact on the world around us. And you've done that. I think students would benefit from hearing a little bit about your path, all the way back to your training at Wharton, your time at Goldman, and then help my students get in the mind of Gary Gensler at Goldman Sachs making the decision to leave that partnership and join the Treasury Department during the Clinton administration and everything that followed. Share that journey with our students, would you?
One, let me just thank Rob for inviting me here. So before I take your question, just thank you. Rob and I got to know each other most closely when we worked together on the Biden-Harris transition about 4 years ago. I think we started chatting in August of 2020 or so, when Jeff Zients put us together and we were chatting on things. I knew Rob a little bit before then, but we actually worked in a foxhole together. And he was a great commissioner at the SEC and contributed to public service. Thank you, NYU, and the center that I know this is being hosted by. It's always great to be back on a college campus. As you said, it was just the greatest gig, being up at MIT. NYU is a great gig too. You know, little different. There's no law school at MIT. So I want to thank you. Look, I would say this to the students. The people that I find that are most successful in their lives, kind of professionally I'm talking about, is that you find that spot where your passions overlap with your talents that overlap with the market. Like, it wouldn't have mattered. I was not passionate about basketball, but if I had been passionate about basketball, there was really not a market for this guy in basketball. Believe me, So, but finding where your passions, your talent, and the market, and that sweet intersection, there's dozens of you in this room will probably succeed at that, but there are others who will go into a law firm or go into a practice area, and you're not going to be passionate about it, and you'll make the bucks, you'll make partnerships somewhere, but it's not going to be as successful. So I start with that. That's just a core kind of life lesson. Now, public service, me and Goldman Sachs. I was at Goldman Sachs. I went there 21 years old. I couldn't believe it. I got hired into a merger and acquisition group 45 years ago last month. So I'm a 66-year-old dude, but you could look it up on Wikipedia. And I got remarkable training from extraordinarily gifted, talented folks. And I have had a career where I've been blessed from Goldman Sachs to MIT and loads of things in between, and now in the Biden administration at SEC, working around extraordinarily gifted, talented people. I get ginned up on that, Rob, like just that interplay and that back and forth. But at Goldman, and I was there 18 years, I had this hankering inside around public service. Maybe just because I was a student of history, maybe in part because my father did not have that hankering and was really, he lived by a couple of thoughts. One is you should only be in the newspaper once when you're alive and once when you die. When you're born and die, and no good ever comes, sorry to the Fourth Estate, but this was Sam Gensler's, but he had his doubts about governments. We grew up in Maryland, and Maryland wasn't always the best, cleanest government, as you can imagine. But I felt strongly, Rob, that it made a difference. I really think if you get a chance to serve at the state level, at the municipal level, at the federal level, you will come away and feel better, just professionally, somewhere in your craw. And I know some of you, like Bob, you serve. There's something about being able to help the American public, whether it's a small community or the wide community. And so that's what drove me. Bob Rubin knew I had a hankering. Bob had run Goldman Sachs, but had met me in 1979, and he was a mentor, a bit of a mentor. He took a risk on me when Bill Clinton won a second term. I had reached out to Bob annually, visited him once a year, and just said, if there's a role, I'm willing to come. And I'm going to close on this. When I chose to leave and it was announced to the partnership, and I've been a partner 9 years, great experience. One of my partners, you can guess who it is or something, said, what? You're leaving to be an assistant secretary? That's all you're going to get? That's all, yeah. And you want to work for a nonprofit? And I thought, it just, we all have different dreams, and this was my dream.
Terrific. And I just want to say, I'm going to ask Gary a little bit more about that, but Gary shared with me before we began, we'd love for the students to ask some questions. Now, I see some of those that I had in class. I'll ask you if you make me. But get ready for some questions to share with Gary.
Do you cold call?
Sure.
Good. The students, they might not love that.
Well, deterrence. Anyway, Gary, by the way, folks don't know this, is a decorated teacher. I mentioned it earlier. And he, just so far as I know, Chair Gensler, you're the only chair that's had office hours on your website. Have you guys seen that? Gary Gensler's office hours. Highly recommend. Where the chair of the SEC will sit in front of like a YouTube video and explain to you what he thinks about various bits in the market.
3-minute videos, 3 minutes. You can do this.
So, Gary, I want to ask you a little bit. You talked about going to Treasury. After you left the Treasury Department, you went to Capitol Hill and worked on what became Sarbanes-Oxley. Talk to the students about the immediate differences you noticed between being in the executive branch at the Treasury Department and being on Capitol Hill. How are those jobs different? How should they think about different contributions you can make in one place versus the other?
Democracy is a messy thing, and it's meant to be, because you're debating public policy, you're debating the things that will affect real Americans' lives, or if you're in other nations, their citizenry. I'd say working with Paul Sarbanes was fabulous. He was just a remarkable individual, legislator, but he had gotten the gavel. He'd gotten, just a few months earlier, most of you don't remember a Senator Jeffords, who switched parties, and it was a 50-50 Senate with a Republican president, and a switch of the party. So Paul had just gotten the gavel like 3 or 4 months before I got up there. So you're asking about the difference about executive branch and congressional. The Constitution lays it out. It's Article 1 is the legislature. They write the laws, and they really do. They really do, and I have a deep respect for that. But it's the messy part of democracy is there's 100 senators, 435 House members, And here we had this crisis, Enron had happened, and I caught up. I knew Paul because he was my home state senator. I'd actually met him when I was in college. I didn't know him well, but I caught up his legislative director, Steve Harris, and I said, this thing failed, Enron, biggest bankruptcy in the history of the nation at the time, and the accounting had been cooked. Cooked books is not a good thing with capital markets. And it was inherently bad for the trust. And I said, if you need me, I'm kind of kicking around. I don't have a job right now if you want me to come up there. And within 24 hours, Paul got me on the phone and said, come on up. Or his scheduler said, come on up. And I sat down with him. And I had written a 15 or 20-page memo for him, laying out the policy options. And it was terrific. And it's not your question, but I'm going to teach you something that Paul Sarbanes taught me. And he said to Steve Harris and Marty Grunberg and the rest of us working on that. He said, I want you to be with Phil Gramm. Phil was senator from Texas, really, really smart, talented, but didn't share many views with Paul Sarbanes. They were really a very different policy perspectives. Both dedicated to this country, but very different policy perspectives. He said, I want you to meet with Senator Gramm, and I want you to see if you can accommodate anything you can accommodate, any point you can take. I know we're not going to get his vote. That was Paul. Paul said, do that. And we were all kind of scratching our head a little bit and everything. He said, no, just take any comments. It's the right thing to do. It'll make better legislation. But it was right politics, too. He knew that it would lessen the opposition from others. And then what happened when we got it out of committee, we got 4 Republican supporters. Senator Enzi in committee he was a CPA. He was the only CPA in the Senate. And he was so offended by the cooked books. He said, we got to fix this thing. Then WorldCom broke. And what I learned is sometimes events outside of your control just happen. And WorldCom, the second biggest bankruptcy, happened or something right then. And the White House under President Bush put word out to the Senate and the House and said, get this done before the August recess. It was a reelect, not a reelect, it was a midterm, and it was like, get this done before the August recess. And boy, did that give Senator Sarbanes leverage. But it was the right thing to do. They made the right political call, get this done, get it done right, but get it done. And Sarbanes really understood that.
I'm so glad you shared that, because I want to come back to, it strikes me that might have been a different political moment than the one we're in now. I want to hear a little bit about your thoughts about it. But before that, I want to talk about your next stint in government, because after Capitol Hill, you ended up back in the Obama administration at the CFTC. That was after, I think, the bankruptcy that surpassed the bankruptcies you just described, the Lehman Brothers bankruptcy, and the legislation that became the Dodd-Frank Act. That was your first time at the head of a federal agency, I think, Gary, serving as chair of the CFTC. And you played a role, I remember I was at Treasury at the time, in shaping what became Dodd-Frank and the structure of swaps regulation, and then implementing it while at the CFTC. So far you've been on the staff of the Treasury, you've been at Capitol Hill. Now you're the head of a federal agency. What's different now? What are you learning now that you hadn't already done in public service?
Well, there's no book. I sort of looked at the time at Barnes & Noble, and there was no book, regulatory chairs for dummies. Really, I did look, and there was not that. We've got dozens of these commissions in our federal government, and state government even more. And I've grown to be a real fan of them, this multi-member decision-making, 5 members, actually in statute, only 3 can be of the president's party at the CFTC, at the SEC, at the Federal Trade Commission, Federal Communication Commission. And it takes a while to get an understanding of what this is. 5 equal votes, but a chair who has an ability to set an agenda, but collaboratively with the other commissioners. I think the American public benefits by it. I actually do. I think it's sort of probably a force that brings 5 different perspectives together. It's probably a force a bit to moderation as well. It doesn't ebb and flow with the election cycle quite as significant as single-headed agencies. So there was a lot to learn about that. I had been at Treasury under Bob Rubin and Larry Summers and so forth, and had worked closely with Arthur Levitt, with Brooksley Bourne, with Bill Rayner. But until you're inside and you're living that decision-making, that was different. Can I say one other thing? Mentors, because there's students here. A lot of your life is going to be happenstance, idiosyncratic. You're going to take risk, and you don't know where they're going to pay off. But don't underestimate the importance of mentors. Really important to be mentors to others, but also develop mentors, be the mentee. Pete Rouse was the chief of staff to Tom Daschle. And I worked closely with Pete when Sarbanes-Oxley went to the floor of the Senate and getting it through the Senate. And I worked with others that were remarkable that were in Tom's staff. Tom Daschle had a remarkable staff. Dennis McDonough was in that staff. There was just a remarkable group of people in that staff. And it was Pete that pulled me into the Obama campaign when I was working for Hillary in 2008. We lost to a great candidate, Senator Obama. And then Pete calls me up and says, we need you over here. And so mentors sometimes, like, I was in a losing campaign, and what did I say to Pete? I said, Pete, you don't need to do that. You won, we lost. He said, no. And by the way, it was very smart of then Senator Obama. Pulled over Jake Sullivan, you know, Jake, who's now the National Security Advisor, Jake, Brian Dees, Neera Tanden, Sarah Hurwitz. We were all in Hillary's 2008 campaign in the policy and speech writing. And Sarah went on to be Michelle Obama's key speechwriter. Jake, you know, Brian Dees later became National Economic Advisor, but it went in and worked in the Obama White House. And Pete was of that mind, let's pull some of these folks in. But we all knew this. You had to come in before the convention. There was a short grieving period, and we had to all unite.
You mean after it became clear that Hillary wouldn't be the nominee in 2008?
Yeah,
Right.
in June,
Right.
in June of 2008.
So you're at the head of the CFTC, and during your time as that chair, you had the Dodd-Frank Act to implement.
And to work with remarkable legislators. I mean, Chris Dodd, Barney Frank, remarkable legislature.
Sure. So they passed a statute that gave that agency, your agency at the time, very capacious authority.
What's that word mean? It's a fancy word.
A lot of authority.
Important authority.
A lot of authority.
Okay.
And I say that because one of the things I take it that you're proud of that I think is remarkable is that you managed to do a lot of implementation of the Dodd-Frank Act during your tenure at the CFTC, Gary. One thing that I noticed when I became
Incredible little agency. It's like the New York Times, as I was leaving, said something about it was the little agency that could. You know that book, The Little Engine That Could? It's just a very nimble, it was about 500-600 staff, but very nimble, able agency.
Sure. One thing I noticed when I arrived at the SEC that surprised me was that when I arrived in 2018, the SEC still hadn't finished implementing Dodd-Frank.
By the way, Rob, even after your 2 years there, I got there in 21, and there was 8 to 10. Congress had given specifically 120 rulemakings to the SEC, about 65 to the CFTC. And we did our best to get those 65 done at the CFTC. I think we got 61 or 2 of them done. We left 1 or 2. But there were 8 to 10 still there in 2021, 9 years later. Mandatory rulemakings.
So I want to come back to what that can teach law students about the making of securities law, because I remember I testified in the Senate at the confirmation hearing. I committed to implementing Dodd-Frank, but I couldn't persuade my colleagues on the commission to do it. You have finalized many Dodd-Frank rules related to executive compensation and other subjects. So that brings me to my next question. Tell me about the differences between the CFTC and the SEC, Gary. What are you noticing 3 years in now in this chair?
You know, I have 3 daughters. And I love them but you're not going to get me to pick amongst my 3 daughters. And Rob, you're not. I was just so honored to chair the CFTC. You've already heard me say it's a great, nimble, remarkable agency. The SEC is unbelievable. I will say this, so I'm not going to pick amongst. They're both, and what a privilege to serve President Obama and President Biden. Mary Shapiro, who had also served as chair of both the SEC and CFTC, and it was during the Biden-Harris transition, and Mary called me up and said, your name's out there. I hadn't been nominated yet. Your name's out there. And so Mary said, I want to tell you something, Gary. You will not be able to run the SEC the way you ran the CFTC. I said, Mary, I'm not even the nominee. What are you talking? She said, I want to give you a heads up. You will not be able to be involved in as many things. You will not be able to go deep. She says, Gary, you like the details, and I'm kind of a numbers guy and like to go deep and stuff. And Mary was right about that.
Yeah,
the flow, the SEC is a commission. It's a 5-member commission, but it's 4,900 staff. And most people in Wall Street and the legal community think of the SEC about the staff, not the 5-member commission, but the staff. And we oversee the markets. And we do somewhere between, if you add it up, 50,000 to 100,000 things a year that are in the name of a 5-member commission that Congress gave 5 commissioners the authority. And from the 1930s to the 1990s were delegated to staff. You go public, that registration statement technically is 5 members of the staff are supposed to read it, let it go effective. Well, of course, decades ago in the 1960s, it was handed down to the staff. Late 60s. Until then, commissioners were still trying to read these filings. So I think of it as the conveyor belt is different. And the first few weeks, how many of you know Lucille Ball and I Love Lucy? Do you know that wonderful scene in the chocolate factory? If you haven't, go. You'll get the YouTube video of Lucy in the chocolate factory. And the chocolates are going by so fast that she's trying to eat them all and everything. I said to my friends and my girlfriend, I said, I feel like this job is more like Lucy in the chocolate factory, the conveyor belts.
That sounds right. And I think something that folks don't realize is that of those thousands of things the 5 members do, most are done unanimously. What people pay attention to are the rulemakings, et cetera.
We vote on 1,100, 1,300 things a year. Literally vote. So, you can do the math. That's 20 plus things a week. And that means there's 40 plus thousand, 50 to 100,000 things that are being done by delegated authority. Now, 2 commissioners can pull them up. In some cases, 1 commissioner can pull them up. So it's interesting sometimes. We get about 200 self-regulatory organization filings a month, from the stock exchanges and clearinghouses. Then commissioners can pull them up, or it's state and delegated authority. So it's fascinating how this, and we oversee $120 trillion capital markets, the best, the deepest, most liquid capital markets in the world. But it's 4,900 people of the staff that really do 98% of the work.
So, Gary, we're here at law school, so I feel like I want to bring the conversation toward something that seems to me, at least as an outside observer, to be a little different at the SEC than at the CFTC.
My two. I'm not going to pick between them.
No, I won't make it. No. This is a different question. Gary, you've been a reformer for a long time. Even at Treasury, futures modernization, worked on Dodd-Frank, CFTC stood up a lot of swaps regulation. But this time at the SEC, you've taken some pretty bold steps. And the courts have from time to time invalidated them on the basis that the agency lacks the authority to take those steps. Now, I know, being at a law school, you're going to say that you respect the courts, and they have robes and everything, and it's great. Yeah.
I do, and it's not the robes.
It's great.
They're Article 3. It's a constitutional system.
No, it's going great. But I think what I want to focus you on, Gary, is it true, am I right, that the courts today play a bigger role in financial regulation than they did at different stages of your career? And if I'm right about that, is it a good thing?
I believe deeply in our democratic system. You're just not going to get me off of this. It's been tested over 230, 240 years. And so it's important that people can go to court and redress their claims. Now, back to laws. You might learn in a law school that a law is a law when it passes Congress and the president duly signs the law. And that, I'm not going to take anything away from your law faculty. That's basically right. But it really doesn't change market behavior unless it's enforced, or the way the regulatory agencies are arranged. You inspect against it or examine. Some agencies are called examination. You examine against it, you inspect against it, and then sometimes open up investigations. And we're a big civil law enforcement agency. We bring 400 to 500 new actions a year. Civil law, the Department of Justice and others do the criminal stuff. But you need the courts. You need the courts. It's an important part of our armature. Just to your question, I think the courts have shifted over 240 years. You know it. We went through, you'll study it, at a time when the administrative state had limited authorities, the Lochner period, and so forth. You had a period from the 1930s on that it was a more expansive authority. We live in a time that the Supreme Court weighed in just this last June with not one, not two, not three, but like 4 big decisions in a week that related to the administrative state. So yes, I'm going to say we do everything within the law and how the courts interpret the law. But if the courts interpret the law differently, I've taken an oath of office to follow that new direction. So
Sure.
if the law shifts, we pivot. What do you do? What are you taught in law school to do?
Sure. Let me push you a little bit on that. So courts, for example, in response to your rule on private funds, share repurchase, they have questioned the degree to which the existing securities laws give you the authority to do the things you'd like to do. And right now, there's pending litigation about the climate disclosure, enhanced climate disclosure rules. One way we can respond to that claim that there is a lack of authority is for Congress to pass more detailed statutes. To actually say, we are saying that Gary has the authority to do the following.
Not me, the agency, the commission.
Sure. Is that a good idea? Should we have an even longer United States code specifying exactly what each agency should do? Or is there value in the administrative state we have, which gives you and others deference and the capacity, the authority to make daily decisions, sometimes as many as 20, 25 a week?
I think our nation has benefited from the organization we've put in place, but we get to decide. 330 million Americans get to decide in this messy thing called democracy. I think that from the very first commissions and regulatory agencies of the 19th century to the SEC, that many of these agencies have really created the success we have as an economy. I can only speak to the SEC here. I think the 90 years that we've been in place is part of our success. It's part of our dollar dominance around the globe. Our capital markets are 40 to 42% of the world's capital markets. We're only 23% of the world's economy. So we punch above our weight class, in part because of the SEC and the laws and rules. To your question, I want to give some context. We laid out an agenda when I came in 21, 50 to 55 substantive rules that we wanted to do. We proposed them, not all of them, pretty much all of them, but not all of them. We've finalized 43. 3 have been overturned. One of them was a Jay Clayton rule, but 3 on my watch have been vacated or sent back, remanded. 5 others are being challenged. 35 are not, and we've done some really great things around corporate governance and about how executives sell their shares into the markets, around the stock markets that anybody in this room, if you sell your stock on a Monday, you get your cash on a Tuesday. When I came into office, you had to wait till Wednesday. It might seem like a small thing. It's actually pro-investor. We've done a lot of really good things around the U.S. Treasury market, around money market reform, about the private funds area and the risk in the private funds area. But yes, from time to time, the courts are going to say that authority isn't there. And while I didn't agree with the Fifth Circuit, I've got to respect this is part of our democratic system. To your question about Congress, we get to decide if that's what folks do. Congress, writing more detailed, what'd you say, 2,000-word statutes, they could do. But I would note Dodd-Frank, this reform legislation, was about 1,000 pages, had 500 or 600 mandatory, maybe it was 400, mandatory rulemakings, 120 for the SEC. So Congress does, shall we say, punt, or leave to the agencies mandatory rulemakings already.
To say nothing of the day-to-day work of the agency that you described, that's the lifeblood of our markets. And that brings me to my next question. So another response the administrative state could have to this would be, rather than trying to make rules, Gary, you propose them, you have an open meeting, someone dissents, the press writes about the dissents and how angry, Instead of doing all this, you could just do enforcement. You could just take the existing rules you have and bring an enforcement action, making the claim that someone has violated an existing rule. I think our friends in Washington have a phrase for this. They call it regulation by enforcement. You heard that before?
I think so.
Yeah. My experience with that, by the way, is that the folks who say this phrase don't like either regulation or enforcement. They just, anyway. So what about that? What maybe the answer is, the administrative state should do is shift to more enforcement, because the judges will say, or one principle of law will be, well, the discretion to enforce the law belongs squarely in the executive branch, as opposed to, for example, rulemakings that challenge the scope of, the limits of the scope of congressional, of the agency's authority.
I think of it, there's a number of tools. As a policymaker, there's a number of tools to effectuate the will of Congress. Congress has written laws, the securities laws, but how to make sure, and what we're really doing is trying to make sure that people can trust the capital markets, and we lower the risk in the capital markets of fraud, manipulation, and so forth. So fundamentally, we're a disclosure-based agency. We're a securities regulator. You didn't ask about it. We're not a climate regulator. We're not a social policy regulator. We're a securities regulator. But that people have the material information to make their decisions about buying and selling securities, and that the intermediaries, the brokers, the dealers, the stock exchanges, the investment advisors, and so forth, don't mislead the public, but also dealing with their inherent conflicts and the like. Now, we were also given some corporate governance responsibilities, interestingly, and this was a debate in the 1930s. Should it be all left to state law, or should we have some corporate governance responsibilities? And we actually do, and we take them seriously. To your question, yes, we use as a tool enforcement. Without a cop on the beat, are all our laws going to be enforced? How many in this room have ever gone over the speed limit?
I don't know what you're talking about.
And the rest of you are lawyers, and you know not to raise your hand or something. But it's something about human nature and finance. And I was at Goldman Sachs for 18 years, and I loved it. We everything I worked on, we did legally. But we played near to the line, and sometimes you hire you mentioned Wachtell Lipton. We'd hire Marty Lipton, who still goes into the office, by the way. But we'd hire the Marty Liptons and the Joe Floms and the Rajan Cohens at Sullivan and Cromwell. These are folks that I
Sure.
worked with. Arthur Fleischer at Fried Frank. All these incredible greats of their time. And we'd say, well, what is the law? How do we kind of make the most for our clients in the firm? How do we make the most money around that edge? So there's like arbitraging laws. And so we sometimes need to bring the enforcement actions to bring people back to the right side of the line.
So let's talk a little bit about that. I want to make sure to leave time for students, but I do want to press you on that part. Because one particular vocal community, the cryptocurrency community, I think would say that you have pursue to some degree regulation by enforcement, making the claim that our existing laws address certain ongoing matters in those markets, rather than providing a clear framework for which those markets can unfold. And I guess my question for you is, what's your answer to them?
There's nothing incompatible with the securities laws and how you record the transfer of value on the internet. This Satoshi Nakamoto, Halloween night, we're almost there, is going to be Satoshi Nakamoto's Sweet 16. 16 years from an 8-page white paper being published on the internet on a cypherpunk mailing list. But underlying it is about just how to record a ledger, how to move value on the internet in a decentralized way. There's nothing incompatible about that. If you're offering or selling a security or offering and selling, for the lawyers in the room, an investment contract, then you have to comply with the securities laws. And the Supreme Court ultimately decides the law of the land. And the Supreme Court has been very clear on this, not just in the 1940s when they first wrote about this, but multiple decades and multiple cases subsequently. And so I think of what we're doing is we're trying to enforce the laws at hand. And I would note, this is a field with a lot of fraudsters, a lot of grifters, a lot of scams. And if anybody is wondering whether you might meet this time-tested test of what is an investment contract, and in essence, if somebody, the public, is investing money with a group of entrepreneurs or a common enterprise, it's called, in anticipation of profit. If you're doing that, think about it this way. Who is signing the engagement letter with your law firm? There's a central enterprise. Somebody's signing that engagement letter. Who is tapping on the door of the broker-dealer saying, can you make a market in my particular asset? It belies logic that there's not some common enterprise in most. I'm not prejudging any one of these.
Sure,
projects.
but Gary, just to push a little bit, and then I'm going to ask the students to share their thoughts. Is that the way we should oversee cryptocurrency, by trying to apply a 1940s Supreme Court decision to this technology?
Look, it's the law of the land, and I took an oath of office to do it, but it also protects investors. At the core of the securities law is a basic concept. You all get to decide what you want to invest in. You want to invest in green energy or something that pollutes the environment. We're not a climate regulator. We're a securities regulator. Do you want to invest in AI or not AI? Just don't lie about the use of AI. But in this field, if you're offering or selling an investment contract or a security to the public, you need basic disclosure. That's what Congress said. It's not just because they said it in the 1930s and the courts have upheld it all the way into the 2020s. It's also because it's sort of the logic of it is basic disclosures.
But let me give you what I think is the other side's best argument. What they would say is everything, and by the way, Gary makes an important point, which is that when you're in certainly his job and the job I was in, you see the day-to-day enforcement actions, the frauds that occur in our markets, and it's tragic. It's incredibly sad.
With all respect, the leading lights of this field in 2022 are either in jail or awaiting extradition right now. So just think about the field. You think about the Federal Bureau of Investigation puts out a report just a month ago or so and talks about all sorts of different things on the internet and scams and everything, and they do this report on crypto, the 5.6 billion, but you can look at the FBI report, was tied up in all of these different problems and fraud just in 2023.
Sure, no, and we're giving career advice to students, so not that, so for sure. But I want to push you because I think one could argue everything you just said counts in favor of bringing cryptocurrency into the regulated securities markets. Why?
It's already there. It's there. There's a non-compliant field, but the laws are there, Mr. Jackson.
Right, but now you have to litigate that. It will take lots of time, and in the meantime, people will continue to get hurt. Wouldn't it be better to develop a framework? And you're
the
good at
framework
developing.
exists.
From
Robert, just because people don't like the law doesn't mean there's not law. You don't get to choose. Is that what you're teaching your law students here at NYU? Are you teaching them you get to choose You get to sort of, I don't think so.
We're teaching them that laws need to be updated from time to time, and it might be helpful to point out that the Supreme Court case from 1940 doesn't perfectly suit the needs of the market today.
I really just, I couldn't disagree with you more, Mr. Jackson.
They got it exactly right in 1940 about Natoshi Sakamoto.
I think that.
'Cause they're good, but
Listen,
that's a lot.
Thurgood Marshall wrote it really best in the Reeves opinion, and if you want to go back and law students and read it, he said, Congress painted with a broad brush. I'm paraphrasing, but Congress painted with a broad brush when they made definition of securities. By the way, they list 32 different items in definition of security. Investment contracts, just one of them, or 31 items. But Thurgood Marshall said they painted with a broad brush basically as to protect the public when somebody is offering and selling a security. They need to have these basic disclosures and protections against fraud and manipulation. It's not that complicated. And we've seen this story before. It's called the 1920s. And look at the number of scammers and fraudsters and grifters in this field. And the American public wants a better future. They deserve the requisite disclosures.
I thought what you might say is that there should be a new framework, but Congress should write it, not me.
Congress already wrote it, Rob.
I see. In 1934.
They've updated it all the way throughout. They've updated it throughout.
So I want to be sure to leave some time for students. Anybody want to ask the chair a question either about what we've discussed so far in the securities markets or, of course, about his path to public service? Yeah.
So I'll just go off of the thread of this conversation we were just having. In terms of Congress already having wrote in the law that applies to crypto and the framework.
It applies to securities.
Right. In a proceeding about a month ago that the SEC had against Coinbase, I believe they stated that the SEC would like to reiterate that its use of the term crypto asset securities is not referring.
Let me help you out before. I'm not going to speak about any ongoing litigation and current litigation. So if you have questions, try your best to not ask about current litigation and things that are in front of a court. And I want to explain why that is because we do that in front of the court. We have really talented people that do that in front of a court, but we're not going to do it through the media or through this forum.
Sure. All right.
So what's your question?
I'll ask it more generally that I think some people maybe have detected a change in the view of the SEC on whether the crypto token itself is a security or whether it necessitates looking at the broader range of expectations and full set of contracts between the two parties. So maybe without speaking towards that specific litigation, do you think it would still be useful for the SEC to state clearly what its position is as opposed to insinuating it through litigation?
I think we've actually stated it pretty clearly from 2017 through now. Under Chair Clayton's leadership, there was publishing something called the Dow Report in the summer of 2017. And through the commission votes on about 85 matters before I ever took an oath of office, settlements and litigated matters into the courts on things like Telegram and Kik, and others that they brought. And then since then as well, have spoken clearly in a consistent voice. And the courts have as well. Court after court after court have analyzed. It's not the 1940s, Rob. It's the 2020s. In multiple district courts and multiple circuits have spoken about the relevance. And, you know, yes, they do quote Thurgood Marshall. Yes, they do quote that Supreme Court from the 1940s, because that's what Supreme Courts and courts do. You know, they look to their predecessors in the Article III courts as to how they decided similar cases. But on motion to dismiss versus motion to dismiss on and on, we've been consistently hearing from the courts that if you're offering and selling an investment contract to the public or a security of the public, then there's certain requirements of disclosure and otherwise. And that if you're an intermediary, that you don't commingle all of these functions in a way that has, you know, important consequences when people aren't protected. You don't have segregation of your funds, and the funds get oops, where were the funds when they so-and-so went bankrupt? You think about it. Think about the lack of protections in this field right now in terms of the intermediaries.
So, Gary, one thing we do teach our students here at NYU is about the competence of various institutions. And you're referring to the courts, and you're right, they've ruled more recently. I think the records, you've had lots of important wins, some less so. But a question is, who do we want to decide this? Do we want judges to decide it on a case-by-case basis with the briefing that they have, and those, or do we want Congress to decide it, or regular? And one thing I would just push you on is it a good idea to have this much law about this large market made that way, as opposed to, for example, by the agency or by Congress?
I really believe in our democracy. I think the courts have an important role, but I counter. The worldwide capital markets are between 250 and 300 trillion. Ours is about 120 trillion. The worldwide crypto market is, what, less than 1%. The core of our capital markets, we have a $55 trillion, $57 trillion equity market. We are doing like fundamental reforms in the equity markets. We have a $28 trillion U.S. Treasury market. We're doing fundamental reforms of the U.S. Treasury market. This is a small part of the market where a lot of people are getting defrauded and taken advantage of. This is a small part of the market where people are lining up in bankruptcy courts too often. But it's still a small part of the worldwide capital market or the U.S. market.
I think that point's very well taken. Other questions? Yes, please. Go ahead.
Given that
There's a mic there for you.
a large amount of the transactions that are happening with crypto are because of black market, and that's driving a lot of the interest. If you're able to rope it in and make it compliance to your satisfaction, what then becomes the utility of crypto, and why would someone use it?
Look, again, we're merit neutral. Even this, we're merit neutral. The investing public gets to decide, and if there's a utility of it, folks get to decide. But it's only with disclosure that you can kind of like see what's there, what's the real use. Now, I did teach this stuff up at MIT and so forth, so I'm just going to say this, and these debates literally go back to like Plato and Aristotle, and there's just fascinating work that you can see how do you use money and how you move value and so forth. We tend not to have, this is 3,000 years of history, hundreds of great nations, thousands of nation states. We tend to have one currency unit per geographic economic state. And there's a lot of reason. Mundell won a Nobel Prize writing about this in the 1950s and 60s. An economist, not a lawyer. But we tend even not to have bimetallism. Gresham advised a Queen of England about why it's hard to have bad money chases out good money. There's a whole economic reasons. It's the ultimate economics of networks. The ultimate economic of networks, just like we kind of have one search engine, is you want one currency unit because it's a store of value, a medium of exchange, a unit of account, and it all has tremendous economics of network. So it's unlikely this stuff's going to be a currency. It's going to have to show its value through disclosure, through use. People understand its use in the same way you pick, amongst the thousands of securities that are listed on the stocks exchanges.
It's a very good question, but I think you're right, Gary, to say that this is a relatively small part, not only of the market, but of what you've done in the market, because you've pursued lots of structural and other reforms, and I want to be sure to talk a little bit about those. One of the things that I think the SEC has been challenged with for years, certainly since before I became a commissioner, is the requirement that the agency analyze the costs and benefits of the choices that it makes to the satisfaction of a reviewing court. And one thing that's hard about that is not every securities rule that we have can be shown in convincing fashion to have benefits that exceed costs. Just to take a simple example, there have for years been good arguments about why allowing insider trading might be beneficial. it gives executives incentives to increase value and such. I'm not sure I buy those arguments, but they're plausible, and we don't have an alternative world in which insider trading is allowed in the United States, against which to measure the world that we have, which is that if you do it, Gary and company will sue you. So what I'm struggling with, Gary, is...
Damian Williams might too.
Sure. So my question for you, Gary, is has it been challenging to get in front of courts with compelling cost-benefit analysis that shows convincingly that the choices you've made, and hard choices and 1,000-page rules against counterfactuals that don't exist, that you've always made the choice that on balance where benefits exceed costs? Or is that something that really can't be shown in every case?
I don't know, economics is in my blood, numbers are in my blood. I was honored to be up at MIT in the Department of Global Economics and Management. So it's kind of in my blood. Rob, I think we benefit from the economic analysis. And having Jessica Wachter, is an incredible finance economist from the University of Pennsylvania that joined us this last 3.5 years. I think it's been good. It's not always easy. That which is good is not always easy. Congress said clearly that we're a competition authority in 1975. They modified our statutes. It was in the face of the New York Stock Exchange at the time had fixed commissions. They were trying to get rid of fixed commissions, and Congress weighed in that they put the word competition in our statute 20 places. That we have to consider competition and anti-competitive things. But then they came back in 1996. And what was somewhat of a deregulatory bill, it had preemption of a bunch of state laws in a law called NISMIA. But they put into the statute something that I think was a good thing. The whole statute was good, but they put another thing into the statute that we have to do economic analysis. It's not called cost-benefit analysis, but it's called, we have to consider efficiency, competition, and capital formation. And so we follow this. And we put it out to public comment, and we get comments back on our economic analysis. I think it's a good thing, but it's a hard thing.
Who decides whether you adequately considered efficiency, competition, and capital formation?
It's multiple levels. At first, we put it out. The public comments on it. We get their feedback. Then the 5-member commission, if we actually vote on it, so that it has to be thought of in that way. Even before that, the chief economist has to sign it. But if we get challenged in court, the court will be looking at it to whether we followed that 1996 law, and they'll also be looking, do we follow a 1940s era law called the Administrative Procedures Act.
Right. And the question would be whether courts are well positioned to consider those complicated things. Other questions?
But that's the beauty of our democracy. Again, you're not going to get me to shy off of that. Bob.
Talked about the fact that a lot of the work of the commission is done by the staff. And I just wondered, do you have any former staff members as members of the commission?
Yes, we're benefited by that all 4. I'm the only one that's not a former member of the staff. So Commissioner Peirce, Commissioner Ueda, Commissioner Crenshaw, Commissioner Lizargo, all have actually, at different times. Commissioner Lizargo was the shortest. It was less than a year. But the other 3 long-term members of the staff.
Is that a good thing?
It's wonderful give and take between the 5 of us. We get on pretty darn well. I think that there's been something like 100 different commissioners, 90 years, about 100 different commissioners. Come from different walks of life, different backgrounds. But I certainly benefit that they're bringing that perspective.
Because I had the sense that staff members had not been brought up. That, for example, when I was at the commission, which is the early 60s, a terribly long time ago, we had 2 longtime staff members, Phil Loomis and Barney Woodside, as commissioners, and that was very important and took a lot of the politics out of commission decisions.
Yeah, I would say that So we do have three that were longtime members. Jaime was a shorter period. I think we do benefit. I didn't know that statistic, but I think there's been, sometimes, White Houses ebb and flow, and White Houses work with the Senate, particularly on picking nominees. So it might be in the early 60s you had those that you mentioned, and then it might have ebbed in a different direction, but it seems that we're in an era right now that it's really talented staff that came up.
Others? Yes, please.
So I guess my question is also sort of about politics. I was in the enforcement division this summer, and there are definitely some people there who seem to feel like, hey, there's always going to be insider trading, and the SEC is always going to enforce against that, no matter who's president. But I kind of am skeptical that things are that simple. So I'm wondering how much does who wins the presidential election next November kind of affect what the SEC is going to be up to from your perspective?
Well, one, I just want to say I don't comment on elections because I'm in a role that I also comply with the Hatch Act. So I just want to let you know that.
Okay.
And those who know, I want to be careful about that.
Are you sure you're not a lawyer?
Look, this is a very important set of questions you've asked, but to Rob's question, we bring 400 or 500 legal actions, law enforcement actions a year. We operate importantly within a legal context. So I've learned a lot about the law, Rob. But to your question, elections have consequences. That's a good thing about democracy. I'm a big fan of 240 years or 230 years of our history as a nation. And it has effects on Justice Department. It has effects on us when we enforce against the securities law. But I would also say, Rob mentioned it earlier, we vote on 1,000 to 1,300 things a year. Victor's back there, my enforcement counsel. He's an unbelievable member of the SEC enforcement staff. And I would say the vast majority are unanimous votes at the 5-member commission. I don't know the exact figure, but it's and we publish our votes on our website for completed matters. Litigated matters we hold off, but you could review it. Vast majority is unanimous votes, but there are some differences. There are definitely some differences in some cases.
Others? Yes, please.
You talked about the importance of democracy and certainly believe in shareholder democracy, but a company should not be run by a democratic process, and that's why we have governance in place. But over the past 3 years, we've seen more, I would say, prescriptive shareholder proposals, especially with respect to environmental and social issues, where shareholders have to vote on matters that are extending beyond disclosure, and yes, they're. So I guess my question is that a good thing to have more shareholder proposals that are prescriptive in nature, or your views on just the evolution of the shareholder proposal process?
No, I've learned a lot in the job about that evolution, and what this was new to me, but I believe in shareholder democracy because it's ultimately the shareholders who own the company. And you have this economic issue of the question of agency. The management team are representing the shareholders ultimately. And I've served on the board of directors of private for-profit companies and public for-profit companies. And it's just a little bit different agency. You can see it even in real time. But this question about shareholder proxies and votes goes back a lot longer. I was actually surprised. We first wrote some of the rules around at the SEC in the 1940s. It's called Rule 14A8, I think. And then in the 1960s, a lot of this then ended up in court, and there was debates about, think about this, the social struggles and the movements of the 1960s, but it was about the environment. It was about
Manufacturer of napalm was something?
manufacture of napalm. It was about workforce and so forth. And And the courts weighed in even in the 70s in some important critical cases in the DC Circuit about our authorities and so forth. And so this is one of the places where Congress affirmatively decided in the 1930s, but reaffirmed in the courts in the 70s, that we do have some role around corporate governance. We have other roles as well about executive compensation. And in Sarbanes-Oxley, I worked with Paul Sarbanes earlier, we put an affirmative obligation about you have to have audit committees, independent audit committees. But back to your question, I think what's really important is that we have a framework, which we do, an age-old rule, this framework, and that companies at times can deny shareholder votes if it doesn't fit that framework, and other times the shareholders get a vote. But we're merit neutral at the SEC. There's no social or environmental agenda. There's a pro-investor agenda.
One possibility is that in the environment we find ourselves in, it's harder and harder to stay merit neutral when, for example, shareholder proposals so frequently attempt to mandate that companies take particular steps on particular matters.
Look, even in a forum like this, it's sometimes hard, and I'm trying my hardest to
I think we've got time for another question. Yes,
all the way
please.
in the back.
Hi, sorry, I'm an LLM student studying
What are you studying?
competition and data privacy. So that's where my question is going to come from. So I'm pretty sure you've read about that Politico article about several academics doing an experiment wherein they purchased geolocation data of several SEC employees.
I did read
to
that
sort of-
news article.
Yeah, to sort of track.
And then I called
Yeah.
Victor.
Yeah, so in case someone's not familiar with it, they purchase geolocation data to track SEC employees and the companies that visit SEC and how it affects the status of the financial market during this
Let me
period.
just
So-
help you out. They presume that they track. They were tracking people from certain buildings. Like if our staff were on one floor of a 20-story building, they didn't know whether it was truly our staff.
Yeah, so
But,
they
okay.
inferred, like, basically if someone stayed in the office for about 20 hours a day, they said it's an SEC employee. So
As
I'm just-
opposed to anybody on the other 19 floors.
Yeah. So I'm just wondering if your thoughts, if any, on how this would affect, like, sort of spark a creation of like a comprehensive data privacy and protection law, since it now involved a federal regulator. And yeah, that's.
Look, of course, I read the article. I did call Victor. And it was interesting. I mean, at some level, it's clever by those researchers. I don't remember which academics wrote it. They made a lot of assumptions, and I'm not here to try to pull down and pull at each of their assumptions, because they were trying to infer something specifically about examinations and visits. And by the way, our regional offices, of which we have 11 going to 10, but we have these regional offices are about close to half the staff is examination. They go in to inspect, and the other half is enforcement. In New York, we have a lot of other functions as well. And so I also had marveled at the inference that if you just do an inspection, like if they were trying to track our examiners rather than our enforcement people. But I do think we in government have to respect that we're in a very changing environment. And all of us in this room, we're easier to track than when I was a kid, right? Our social media footprint, our use of our cell phones can so easily be tracked. And there's much better research on this now than when I was teaching at MIT, but I used to ask some questions of students, like, here, I'll ask one of them. How many of you in this room charge your cell phone every night? Okay. Now, there's studies that show that those who charge their phones every night are better credit than if you don't charge your phone every night. Now, you can game the system and charge your phone every night and hope that somebody does a FICO score on you on charging your phone. But, it's these things. We can be tracked in so many different ways now. and the algorithms. And AI is the most transformative technology of our time. Everywhere up, I don't know, the Industrial Revolution or the 1920s. I mean, you can debate how significant it is. And it's not just generative AI. I mean, artificial intelligence has been around for a good 10 years. There's a lot of really important, critical things happening. And I think it's a positive, but it's not without its risk. It is not without its risk. And I would say here in a law school, fraud is fraud. If you use an AI model to defraud the public, you're the one deploying that model. There's still somebody there. But there will be an interesting question ultimately in front of the courts at some point in time about scienter. You want to write a really interesting law school journal article. It's about, the scienter and using, a self-learning model. And
What is the state of mind of an AI bot?
Yeah, and I would say, what's the state of mind of the person that's deploying the model?
Right.
But courts, and you'll need the courts ultimately, or Congress, to sort through some of that.
Folks, I'm sure you can see why Gary, before this job, was an award-winning teacher and why Office Hours with Gary Gensler is so worthwhile. Please join me in thanking him for sharing his wisdom with us at NYU.
Can we thank Rob? I mean, he does have the three-piece suit, the tie, always a little undone. But he's really very sharp, and I can see why you all like having him as a teacher, too, and part of your faculty.
Thank you very much. Thank you.